You know that feeling, right? You log on, you check the charts, and you see it again. Bitcoin is volatile, Ethereum is making moves, and some new meme coin you've never heard of is up 500% overnight. But then you look at XRP, you look at HBAR, and you see quiet. A slow, grinding consolidation that can be frustrating, even demoralizing. For years, communities have been told about the world-changing technology, the enterprise partnerships, the immense potential. So the number one question that echoes across social media, through Discord channels, and in the minds of thousands of holders is, if these projects are so powerful, why are they so quiet? What if I told you that silence, that apparent lack of explosive retail hype, isn't a sign of weakness? What if I told you it's a symptom of something far more profound, far more powerful happening just beneath the surface? What if that quietness is actually a mask for the most significant institutional accumulation and strategic integration phase in their history? Today, we are pulling back the curtain. We are going to expose the real reason XRP and HBAR are so quiet, and the truth of what's actually happening while the rest of the market is distracted by noise. I promise you, it will shock you. This isn't about hype. This is about the foundational rewiring of global finance, and it's happening in silence. Stick with me, because what you're about to learn will fundamentally change how you view these two digital assets forever. Let's start with XRP. For any long-term holder, the price action can feel like a paradox. On one hand, you have the news, the landmark SEC settlement providing unprecedented regulatory clarity in the US, the ever-expanding list of RippleNet partners, and the constant drumbeat of its superiority for cross-border payments. On the other hand, you have a price chart that has, for long periods, seemed stubbornly resistant to this positive news flow. This disconnect is the source of endless frustration, but it's also the source of the secret. The truth is, XRP isn't being built for a retail-driven price pump. It's being methodically and deliberately embedded into the core plumbing of the global financial system, a process that happens not on public exchanges, but in institutional boardrooms, regulatory sandboxes, and behind the firewalls of the world's largest banks. What you perceive as quietness is, in fact, the sound of deep off-market integration. While retail traders are watching minute-by-minute charts, Ripple is engaged in a far more significant game. Consider their strategic acquisition of Medico, a Swiss-based leader in institutional digital asset custody. This wasn't just another company purchase. It was a masterstroke that provided Ripple with the essential technology to allow conservative, highly regulated banks in jurisdictions like Switzerland to hold, manage, and transact with tokenized assets, including XRP, directly. This move single-handedly solves one of the biggest hurdles for institutional adoption: compliant, secure custody. Major banks don't buy their assets on retail exchanges. They use institutional-grade custodians like Medico. Ripple now owns one of the best. This is a foundational move, but it doesn't create a green candle overnight. It's quiet, strategic, and profoundly important for the long-term flow of institutional capital. Furthermore, look at the on-chain data if you know how to read it correctly. The massive XRP transactions that get flagged by whale trackers are often misinterpreted. The recent transfer of over $22 million worth of XRP wasn't a whale getting ready to dump on the market. A closer analysis reveals it was a transfer between known institutional custody wallets and Ripple's own operational wallets, likely to provision liquidity for a new on-demand liquidity (ODL) corridor. This is the real utility happening in real time. It's the movement of value to facilitate cross-border payments for a major client. This isn't speculative. It's operational. The market barely blinks because it's not a speculative trade. But for those who understand, it's a powerful signal of growing network demand. Ripple's partnerships are also misunderstood. People wait for a PR announcement with a major US bank. But the real work is quieter. It's the pilot programs with entities linked to the Bank for International Settlements, BIS, the central bank of central banks. It's the advisory roles with finance ministries in the Middle East and Asia. It's the successful cross-border payment trials in emerging economies that prove the technology works under real-world stress. These events don't get hyped on social media because they are often subject to non-disclosure agreements and are part of long, methodical integration processes. Ripple isn't trying to pump the price with a partnership announcement. They are trying to become the underlying settlement layer for their partners' entire cross-border business. That is a much deeper, quieter, and ultimately more valuable endeavor. With the SEC settlement now finalized, this process is accelerating in the United States. The quiet conversations that were happening behind closed doors with U.S. financial institutions, who were legally prohibited from fully engaging with XRP, have now become active integration projects. The quietness you're perceiving is the calm before the storm of official, production-level rollouts from US-based banks and payment providers. They are not going to announce their every move. They will simply flip the switch when their systems are ready. The shocking truth about XRP's quietness is this. It is the sound of professional execution. It's the sound of NDAs being signed, of compliance frameworks being built, of liquidity corridors being provisioned, and of institutional-grade infrastructure being laid piece by meticulous piece. While the retail market is looking for fireworks, Ripple is building a global financial highway system in the background. The noise will come, but it will come after the work is done, when the trillions in transactional volume begin to flow through these new rails. Now, let's translate that fundamental quietness into what we're seeing on the charts, because the technicals are telling the exact same story as the institutional backchanneling. Right now, as of June 2025, XRP is consolidating in the $2.19 to $2.30 range. To the impatient or untrained eye, this looks like stagnation, a boring sideways drift. But to a seasoned technical analyst, this is one of the most exciting and potent chart patterns you can find. This isn't weakness. This is the textbook definition of a coiled spring, a market compressing immense energy into a tight consolidation pattern just before a massive, explosive breakout. Let's dissect this. First, look at the support levels. The previous all-time high has been surpassed, and now the area above $2 is acting as a formidable floor. Each dip below, say, $2.20 is being bought up almost instantly, with higher volume on the bounces than on the dips. This indicates that buyers are aggressively defending these levels, absorbing any sell pressure that comes their way. This is not the sign of a weak market. It's the sign of a market where smart money is setting its bids and refusing to let the price drop, patiently accumulating every token they can in this range. It's like a pressure cooker systematically building steam, with the support level acting as a reinforced base, allowing the pressure to build upwards. Now, let's look at the key indicators. The Bollinger Bands on the weekly chart have been tightening for weeks on end. For those unfamiliar, the Bollinger Bands measure volatility. When they squeeze together like this, it signifies that volatility is massively compressed. This is a rare and powerful signal. Historically, a prolonged Bollinger Band squeeze is almost always resolved by a violent expansion in price. Cannot stay compressed forever. Think back to late 2017. XRP experienced a similar multi-week squeeze before it launched into a near-vertical, life-changing rally. That wasn't a random event. It was market physics at play. We are seeing the exact same technical precursor right now, but this time, it is backed by the fundamental catalyst of full regulatory clarity, something that was absent in 2017. The futures market tells an even more compelling story. We are seeing a steady, methodical rise in open interest. This means more and more capital is flowing into the XRP derivatives market, with sophisticated players placing long-term bets on a future price move. Critically, this rise in open interest is happening while the price remains relatively stable. This is a classic bullish divergence. It signals that institutions and large traders are building their positions quietly, without chasing the price up. They are setting the stage. When a major price expansion event occurs, this stored-up open interest will act like rocket fuel, amplifying the move through short squeezes and leveraged momentum. Furthermore, look at the on-chain data, the footprints in the digital sand. As we've discussed, exchange reserves are plummeting. This is perhaps the single most bullish long-term metric. It means holders are not keeping their XRP on exchanges where it can be easily sold. They are moving it to cold storage, signaling a strong conviction to hold for a much higher price. At the same time, data shows that wallets holding large balances, the so-called whales, have been in a consistent state of net accumulation for the past 90 days. This isn't the chaotic buying of retail. This is the patient, methodical positioning by players who move before the crowd even knows a train is leaving the station. The shocking truth from the charts is this. The quietness of XRP's price is a technical illusion. It is masking one of the most potent bullish consolidation patterns in the entire crypto market. The combination of strong support, tightening volatility, Bollinger Band squeeze, rising open interest, and massive on-chain accumulation points to a single, high-probability outcome: a violent and sustained breakout. The spring is being coiled to its absolute limit. The only question is what specific catalyst will finally let it snap. Now, let's shift our focus to HBAR, because if XRP's quietness is misunderstood, BAR's silence is on another level entirely. Trading around the 17 cents mark with what appears to be declining speculative futures volume, it's easy for the retail market to dismiss it as a project that has lost momentum, faded from the spotlight, and been left behind by the latest hype cycles. At first glance, it looks like weakness. But if you zoom out and adopt a truly institutional, long-term perspective, you realize you're not looking at a crash. You're not witnessing capitulation. You are witnessing a deliberate and surgical clearing of the noise. The speculative, short-term traders who chase quick 2x flips and follow social media trends, they've largely abandoned HBAR because it doesn't provide that instant gratification. What remains is pure, unadulterated signal. The current holders and accumulators are, by and large, institutions, enterprise developers, and long-term visionaries who understand what Hedera is actually building and why its governance model is its ultimate secret weapon. This isn't a price collapse. It's a profound narrative reset. When volume dries up in a speculative meme coin, it's almost always the beginning of the end. But when it happens in a protocol with deep enterprise roots, a unique and patented tech stack like the Hashgraph consensus, and a governing council that is literally a who's who of Fortune 500 companies, it signals the start of a deep strategic repositioning. The players holding HBR now are not here for a weekend pump. They are here to own the foundational rails before the global enterprise train leaves the station, and that means playing the very, very long game. The drop in speculative volume isn't bearish. It's by design. Hedera is quietly pushing out the noise traders and clearing the decks for infrastructure-level players. We're not talking about individual wallets gambling on a price spike. We're talking about multinational corporations, governments, and global consortia integrating Web3 technology into real-world, high-stakes operations. The significant activity surrounding HBAR isn't found on retail exchange order books. It's happening in off-exchange private deals, in node operator agreements, and in the architecture of large-scale enterprise deployments. These integrations, which form the true backbone of future adoption, don't flash on retail volume charts. HBAR isn't trying to compete with meme coins or ignite short-term FOMO. It's building something fundamentally different and far more ambitious. A permissioned, enterprise-grade Layer 1 network designed for unparalleled performance, ironclad regulatory compliance, and sustainable long-term viability. One need look no further than the Hedera Governing Council, a lineup of global enterprise titans including Google, IBM, Boeing, Dell, LG, Standard Bank, Ubisoft, and many more. These aren't just superficial PR partnerships to pump the price. These are active, invested stakeholders who are legally and financially committed. They run validator nodes, they shape the network's governance, and, most importantly, they are actively deploying the technology in critical real-world use cases across dozens of industries, from finance to aviation to supply chain management. The underlying technology, the Hashgraph consensus algorithm, is an absolute beast. It provides asynchronous Byzantine fault tolerance, ABFT, which is mathematically the highest possible level of security for a distributed ledger. This translates to ultra-low latency and transaction finality in mere seconds, not minutes or hours. This level of performance isn't just impressive on paper. It is absolutely essential for serious enterprise applications. Whether you are tokenizing trillions of dollars in real-world assets, managing complex, compliant supply chains for pharmaceuticals where data integrity is a matter of life and death, or executing millions of microtransactions daily with legal oversight, speed, security, and reliability aren't optional. They are critical requirements. Behind the scenes, the smart money knows what's happening. The Hedera Foundation's silent but strategic expansions into highly regulated jurisdictions and its laser focus on enterprise-grade use cases. like the Guardian platform for verifiable ESG data tracking or DLA Piper's Toko platform for legal-grade tokenization, reveal a strategic positioning that flies completely under the retail radar. This isn't weakness, it's strategic silence. It's the kind of quiet confidence that typically precedes game-changing announcements and massive adoption surges. The shocking truth is that HBAR is quiet because its target audience, global enterprises and governments, don't operate on hype. They operate on performance, security, and compliance. And in those metrics, Hedera is building an undeniable lead. As global regulators, from the US to Europe to Asia, continue to tighten the screws on purely speculative crypto assets and crack down on the reckless mania of past cycles, one thing is becoming crystal clear. The next great bull cycle, the one that will be defined by the entry of serious institutional capital, will not be about hype tokens or viral pumps. It will be dominated by projects that offer demonstrable real-world utility, possess robust compliance frameworks, and have fostered deep institutional alignment. And right now, in June 2025, XRP and HBAR are not just ahead of that curve, they are actively paving the very road that institutional finance will travel on. Both XRP and HBAR share crucial, powerful traits that set them apart from the vast sea of speculative altcoins. They have compliance baked into their very DNA. They possess incredibly scalable technology capable of supporting massive transactional throughput at a global scale. And they are being adopted by serious, global organizations that don't chase fleeting hype cycles. They operate on long-term vision, strategic necessity, and rigorous due diligence. This is precisely why XRP's price action often moves with a controlled, institutional feel, and why BAR's growth appears so deliberate and measured. This isn't the chaos of retail-driven FOMO. It is the calm, methodical execution of infrastructure-driven, foundational building. Look at XRP. It's not just a crypto token. It's the fuel powering real-time, low-cost settlements across global payment corridors, reducing financial friction and freeing up trillions of dollars in trapped capital where the traditional finance system has struggled for decades. From cross-border remittances in Southeast Asia to tokenized real estate pilots in Europe and commodity trading platforms in the Middle East, XRP is quietly moving billions of dollars in value, facilitating liquidity where it's desperately needed, with the landmark SEC settlement providing a clear and unencumbered path forward in the United States. These aren't just speculative use cases anymore. They are live, rapidly expanding deployments with active partners who are driving genuine, measurable, and now fully compliant utility. Meanwhile, HBAR is quietly becoming the trusted ledger for the world's largest enterprises. It is running government-backed public registries, enabling verifiable ESG data tracking for major corporations seeking to meet new climate regulations, and powering permissioned enterprise chains that demand the absolute highest standards of security, performance, and compliance. Hedera's unique enterprise-grade architecture is unlocking new possibilities in heavily regulated sectors like supply chain logistics, healthcare data management, and the burgeoning carbon credit markets. It is methodically tackling trillion-dollar industries, not by chasing headlines, but by earning institutional trust through superior performance and a one-of-a-kind governance model. This focus on verifiable data and auditable transactions is precisely what the next, more mature phase of enterprise blockchain demands. This is the kind of foundational work that doesn't grab the daily headlines or generate viral social media buzz, but it is what moves entire markets over time. The stage is being meticulously set for a massive rotation in crypto capital flows, a great rotation away from noise-driven speculation and into networks that are actually solving the real-world problems that institutional investors, multinational corporations, and global regulators deeply care about. As regulatory clarity becomes the new global norm, projects like XRP and HBAR won't just survive, they will thrive. Not in spite of regulation, but because of it. Their compliance-first approach and enterprise-ready governance models mean they are already aligned with the stringent rules that institutions are mandated to follow. That puts them in the prime position when traditional finance finally embraces tokenization and decentralized infrastructure at scale. When the next wave hits, and it's coming, the race won't be about who can shout the loudest on social media or pump the fastest on a retail exchange. It will be about which networks can actually deliver on their promises of security, scalability, and compliance under institutional-level scrutiny. XRP is becoming the backbone of global liquidity networks. HBAR is laying the secure, trusted rails for the next phase of tokenized business, sustainable finance, and compliant digital assets. Both are quietly preparing for that moment. The only question now is, are you paying attention before the explosion? So, what is the real, shocking truth behind why XRP and HBR have been so quiet? It's because they are playing an entirely different game than 99% of the crypto market. While everyone else has been chasing short-term price pumps, XRP and HBAR have been systematically integrating into the core of the global enterprise and financial system. Their customers aren't retail traders. They are central banks, Fortune 500 companies, and global regulators. Their deals are forged in boardrooms, not on social media. This quietness isn't weakness. It's the sound of professional, high-stakes execution. This is what creates the great rotation of capital away from hype and towards real utility. The shocking truth is simply that the most important work in building the future of finance is happening in silence. This provides a massive investor's edge for those who can see it. While others chase noise, you have the opportunity to follow the smart money into the foundational infrastructure of tomorrow. XRP and HBAR aren't just making noise, they're making critical moves. And the time to pay attention is now, before the quiet giants finally begin to roar. If your mind is reeling from what this all means, if you finally see the real game being played behind the scenes with XRP and HBAR, then you need to be part of the BeCryptoSmart community. Don't wait to get informed. Hit that like button right now if this analysis opened your eyes. Smash that subscribe button and, most importantly, ring that notification bell because the next major signal from these quiet giants could be the one that changes everything, and you'll want to be the first to know, not the last to react. We don't follow the hype, we decode the real moves. The great rotation is happening. Stay ahead, stay smart, stay BeCryptoSmart.